important article in the New York Times today, actually that was yesterday, regarding corporate tax rates. And what they're talking about is essentially multinational corporations, not small businesses, okay? They're talking about multinational corporations based in America. So, and they used General Electric, GE, as an example. And this absolutely needs to get out there. And I'm going to read part of this article. Let's see how far I get before it catches your attention. General Electric, the nation's largest corporation, had a very good year in 2010. The company reported worldwide profits of $14.2 billion and said $5.1 billion of the total came from its operations in the United States. Its American tax bill? Zero. In fact, GE claimed a tax benefit or deduction of $3.2 billion. That may be hard to fathom for millions of small American businesses and owners and households now preparing their own tax returns. But low taxes are nothing new for GE. The company has been cutting the percentage of its American profits paid to the Internal Revenue Service for years, resulting in a far lower rate than most multinational companies. This extraordinary success is based on an aggressive strategy that mixes fierce lobbying for tax breaks and innovative accounting that enables it to concentrate its profits offshore. GE's giant tax department, led by a bow-tied former Treasury official named John Samuels, is often referred to as the world's best tax firm. Indeed, the company's slogan, "Imagination at Work," fits this department very well. The team includes former officials not just from Treasury, but also from the IRS and virtually all the tax writing committees in Congress. While General Electric is one of the most skilled at reducing its tax burden, many other companies have become better at this as well. Although the top corporate tax rate is supposed to be 35% in the United States, one of the highest in the world, as they point out, companies have increasingly used amazing amounts of shelters, tax credits, and subsidies to pay far less than this. Yes, and GE paid zero and got money back on top of it. In a regulatory filing just a week before the Japanese disaster put a spotlight on the company's nuclear reactor business, GE reported that its tax burden was 7.4% of its American profits, about a third of the average reported by other American multinationals. Even those figures are overstated because they include taxes that will be paid only if the company brings its overseas profits back to the United States. With those profits still offshore, GE is effectively getting money back. Such strategies, as well as changes in the tax laws that encourage some businesses and professionals to file as individuals, have pushed down the corporate share of the nation's tax receipts from 30% of all federal revenue in the mid-1950s to about 6.6% in 2009. Yet, many companies say the current level is so high it hobbles them in competing with foreign rivals. Even as the government faces mounting budget deficits, the talk in Washington is about lower rates. President Obama has said he's considering an overhaul of the corporate tax system with an eye to lowering the top rate, ending some tax subsidies and loopholes, and generating the same amount of revenue. He has designated GE's chief executive, Jeffrey Immelt, as his liaison to business communities and as the chairman of the President's Council on Jobs and Competitiveness. And it is expected to discuss corporate tax rates. He understands what it takes for America to compete in the global economy, Mr. Obama said of Mr. Immelt on his appointment in January, after touring a GE factory in upstate New York that makes turbines and generators for sales around the world. A review of company filings and congressional records shows that one of the most striking advantages of General Electric is its ability to lobby for, win, and take advantage of tax breaks. Over the last decade, GE has spent millions of dollars to push changes in tax law and for a more generous depreciation on jet engines and so on. It is also operating in an environment that is leasing equipment to other companies around the world, with profits that face very little taxes, especially not here at home. Company officials from GE say that these measures are absolutely necessary for GE to compete against global rivals, and that they're acting as responsible citizens. GE is committed to acting with integrity in relation to our tax obligations, said Ann Isley, a spokeswoman. We are committed to complying with tax rules and paying all legally obliged taxes. At the same time, we have a responsibility to our shareholders to legally minimize our costs. But guess who the shareholders are? Because it isn't us. The assortment of GE tax breaks has won in Washington, that GE has won in Washington, provided a significant short-term gain for the company's executives and their major shareholders. While the financial crisis led GE to post a loss in the United States in 2009, regulatory filings show that in at least 5 years, GE has accumulated $26 billion in American profits and received a net tax benefit of from the IRS of $4.1 billion, because they're offshoring the profits. If anyone is interested, I'm going to make a follow-up to this video in order to flesh out the entire article. Actually, I'm basically just reading it so that you can be informed about some of the stuff which you're not going to see on TV.